Hello and welcome to my YouTube channel. This is actually Forex Academy, Forex Pros Academy. I am Hassan and I'm taking you through the early stages or introductory part of Forex trading. Maybe you're a Forex trader that you are already experienced or you're just beginning. I think this is the right channel for you, and we will be taking you through Forex trading step by step, actually baby steps, because we believe that Forex trading is not some kind of rocket science, and we know that everyone can actually do Forex. So if you are new to my channel, I request you to consider subscribing, hitting the like button, commenting, and actually sharing. So today I want to take you through a step-by-step presentation of Forex as a beginner. Sometimes we just dive into Forex, we don't know what it takes, we don't know what is required, we don't know even where to start. But here we want to start from step 0. Actually, in this presentation, I'm here to define basic terminologies that we will be using in other parts of our courses. So, shall we dive in? Possibly. Well then, so what is Forex in the simplest terms possible in layman's language? You will realize that you have heard Forex here and there. The first time I heard about Forex was I was in Form 2 and in high school, and it was simply buying and selling of foreign currencies. So in high school you might be told that we sell or we buy, but that is a layman's term. But the reality is we exchange currencies. We don't buy, you don't sell money, you don't buy money, but you exchange at an interest or at a profit depending on the present interest rate. Now, foreign exchange is actually considered to be interaction between two currencies of different countries, because you cannot exchange currency of the same country. It is not possible. So you need at least two currency pairs to exchange them. Take an example: you're traveling abroad or you're traveling from abroad to your home country, and you have these different types of currencies. Forget about Visa card that actually does automatic exchange. Now we're talking about carrying cash and you want to cross borders and go and spend some money elsewhere that is outside your country. You will have to exchange the currencies. So Forex is basically exchanging currencies of two countries. Now, you can exchange currencies with your friend. If you are on the border and you don't have to go to the bank, you can do Forex with your friend just there and then, and you have your business sorted. Or you can go to your bank account, to your bankers, and then do Forex over the counter. You buy dollars and then the following day you come and sell them. If the price has changed, you make that small profit, which is actually very fine. Now, when we talk about Forex in online context, now we talk about contract for difference, or CFDs. Contract for difference is when you sign a contract of predicting where the price of a given currency pair will move to. So if you predict that the cost of buying a dollar is going to go high, and then the following day you find that the price has gone high, actually you are worthy to be paid. You are paid for that, and you are paid for how long the price changed. And if you predict that it's going to decline, then the price goes up, you are wrong. And when you are wrong, you pay for it. That means making a loss. Now, Forex trading in online sessions is usually based on how best you can predict what is going to happen with the prices of these, with the pricing of one currency against another. I will explain about pricing later in this video, but I want you to remember that it's all about how prices move. If the price move up and then you had predicted that it will go up, actually you make money. So It is not that as hard as it sounds. Maybe one day you had somebody scare you, told you that no, Forex is one hell of a business. You don't want to do that. It's a gamble or anything like that. Forex trading is not gambling. Forex trading becomes a gambling if you just dive in and try to buy or sell what you don't know. But Forex is being in the market, being able to predict the world economy and what's going on around the world. There is news here and there. There is the history of what has been happening. So you don't just guess. It's not guesswork. It's about analyzing what is going on in the world of business, in the world of economy. Now, when we are exchanging Forex, you might wonder that why is it that as a person I'm just doing a very small exchange, maybe $200, $500, and you feel like it is not even having an effect in the market. It's true that it doesn't have an effect in the market because the Forex market is very, very big, and actually no one person controls Forex market. But I want you to imagine now that we are trying to import cars from Japan, and this is one hell of a transaction that will involve depositing or buying or selling dollars of a highest amount. So that is what will affect the movement of price. Now take another example. Elon Musk is trying to maybe reduce his downsize the company. There is retrenchment, and there is a lot that is affecting the dollar in the United States. So you find that that effect will make prices move, and once it moves, that is now how a trader makes money. Now the movement of price in the market of Forex is called volatility. That when the market moves, that is, we say that it is volatile. It is important that when you are trading, you consider that you enter the market that is volatile, market that prices are moving, because without movement of price, there is no making money. Because assuming you are a retailer and you are trying to make some money from buying and selling, there is no profit of you selling at the same buying price that you bought the item. That is the same thing to Forex. If prices are not moving, then you are not going to make money. It's as easy as that. Now, that is Forex in layman's language, buying and selling of foreign currencies, actually exchanging, not necessarily selling money or buying, but it is exchanging. Like right now, I can exchange $1 for 121 Kenyan shillings. That is exchanging. I give the cash to the bank, the Kenyan shillings to the bank will give me US dollars. I am tired of US dollars and I'm back home and I need my Kenyan shillings to use, so I have to return the dollars and the bank has to buy from me, or I have to sell the dollars to the bank. That is exchanging currencies. Well, alright, so you can ask yourself, so who are supposed to trade? Who are supposed to trade? And the immediate answer to that question is that trading can be done by anyone. Forex trading can be done by anybody. I came to realize that Forex trading does not require you to go to class, attend very long lessons, maybe qualify, have a degree, or do what. It is what we see. Actually, the prices, the charts have been simplified so that anybody can see and get information from that chart. Though when we are teaching Forex, we use complicated terminologies, we use a lot of English, we use a lot of scary words. We try to tell you this is that, but that one should not make you feel like Forex is not your thing. In one way or the other, you might need to know what Forex is about. Even if you don't want to trade, you just want to know what Forex is, and you realize that we are moving away from physical trading, from retail trading. We are entering to a world where we do business online mostly. So we will have to move to cryptocurrencies someday. We will have to move to talk about buying stock exchange, yeah, because the older ways of making money does not pay as much as it pays nowadays online. You realize that people go to the farm, do difficult tasks, and those who really work, they earn too little compared to those who use modern means of making money. Now, I'm not discouraging you from doing your job or your tasks or elsewhere, and I'm not telling you to stop whatever you're doing to join forex trading, but I'm trying to explain that anyone can do forex, and actually this forex can be done along with another kind of a job. If you have something that you are doing and you need also to add forex on top, then stay to this platform. Kindly subscribe and follow us. We will teach you one-on-one, a step at a time, on how to major in forex. We look forward to everyone becoming a forex trader, everyone becoming a forex pro. We don't want you to lose your money. It's not all about losing money in forex. You need to make money. Here we believe in trading and getting paid. That's why we are out here to offer this knowledge actually for free. Now, what do you need to become a forex trader? That's the question I wanna talk about today. It is very simple. You don't need a certificate. You don't need maybe a clarification from a clearance from the government. You don't need tax compliance. I don't want to talk about that loudly so that you don't get in trouble with your country. But then you don't need too much to get into trading. What you need is to be above 18 years, and then you just need a couple of things to get started. So the first thing that you need will be a trading platform. We call it Metatrader. Metatrader can be Metatrader 4 or Metatrader 5, which means that either of them can be used as a trading platform. When we talk about trading platform, this is something that it does not take part in the business. For example, when you want to sell something, you go to the market. When you go to the market, you don't take away the market, you don't take away the sheds, you don't take away the building structures around the market, but you just enter there, do your business, and leave the market behind. That is how MetaTrader operates. So we go there as a trading platform. We open and close our trades because that is the meeting place for traders. That is where the buyers and the sellers meet. They fight. Whoever finds a breakthrough, finds whoever messes up the market. That is what we do in a MetaTrader 5. What we do, we need just a place where we can meet and do business. Now, as a beginner, you need to download the app. You need to download the app from Play Store. It is either MetaTrader 5 or MetaTrader 4. That will help you even to learn to trade before even you can invest real money. You can get a demonstration account from Metatrader 4 that gives you virtual money to learn with. And I will ask you, as you continue to learn in this channel, I need you to have the ability to move with that step by step. That is why I'm starting from step 0. So make sure that you learn a step at a time. Make sure that you make a step at a time. So right now, I will maybe expect you to download MetaTrader 5 or MetaTrader 4 so that we can have a way of moving together. Now, the second thing that you want to need to become a forex trader is a broker. You need a broker. What do I mean by a broker? A broker is somebody who is the intermediary between the buyers and the sellers and the major banks. They act as small banks or retail banks. In this case, a broker offers you somewhere to deposit your money, somewhere to withdraw your money, and somewhere maybe to interact. Or some brokers offer training like us, but then majorly what you get from a broker is a platform that will help you to deposit your cash and to withdraw your cash. Now, they act as small banks. Now, when you have a bank, you can go there, deposit money, access credit facilities, and all such stuff. From there, you can know how to do other business. Now, as a broker, you will be from a broker, you will be provided for what you need to trade. You will be provided with an account that is operational. You cannot trade in MetaTrader 4 and make money without having a broker. So you need a broker as your banking or a financing platform. That is where you will interact with real cash. Now, the last thing that you want to need is to open a live account, live trading account. The account that comes with the platform, MT4 or MT5 platform, is a demonstration account that is just for you to learn. But once you are mastered the content, or you need to try your skills in a real life situation, now in a situation where you make money, you have to open a live trading account. And for you to have a live trading account, you need a few basics. That is maybe your ID number, your ID, photos of your ID maybe, and proof of your residency. In other words, you just need to prove that you are above 18 so that you can be allowed to have an account. Opening accounts involve very few basic steps that you can even do it at any time. Now, I don't want to go there that deep, but then these are the three things you need: a trading platform, a broker, and a live trading account. Now, below this video, I'll share the link to one of the brokers that I might recommend for the beginners, brokers that I trust, brokers that I work with, brokers with who does not cost you a lot, the brokers with very low spread. So these brokers will help you grow your trading skills, and then once you have a live trading account with them, you are good to go. You're good to make some cash. You're good to learn while doing. Actually, Forex is something that you have to do it yourself. At Forex, you need to practice. You need to be there. You need to be represented. Sometimes it needs commitment. Sometimes it needs commitment. You need to commit yourself, because it's one way of making money, and you don't want to make money from where you are not investing your time and efforts. I think that is all you need to have an account. You can have even more than one account, and then from there, depending on your demand and the amount of money you want to invest. Now, for you to make money, you need to invest. Now, from there, once you have invested, then you find a way to log back into MT5 and start buying and selling currency pairs. Well, let me dive straight into Metatrader 5 or Metatrader 4 platform. The platform looks like this. This is Metatrader for a phone, for a tablet, or for a desktop, or a computer, or anything, any device that you can use to trade. Now, you see, when you download Metatrader 5 or Metatrader 4, you will find an interface like this one. You will find an interface like this, and you will find a currency pairs. I'll talk about currency pairs later, but you will find currency pairs, and we call them quotes in Forex trading. Quotes, I can call it quotation, or how one currency is quoted against another. Now, if you look at this, the first interface that you'll get, the first display, you'll find that there are what we call currency pairs. Like in the phone display, you find Euro USD. In other words, it's a euro quoted in terms of US dollar. For instance, here you have that Euro USD, it is 1.13829. That is as simple as it sounds, that 1 euro is equivalent to 1.1389 US dollars. You can talk about British pound and US dollar, and you are told that 1 British pound is equals to 1.52494 US dollars. In other words, one currency pair is quoted against another. Now, in this case, you realize that the first currency is called the base currency. That is the base currency, what we are quoting. And the second one is called quote currency. We are quoting the base currency in terms of the quote currency. You can have as many pairs as you can. You can see all these quotes, and you realize that the prices are quoted twice. Like there is two columns of price. Now, the first column and the second column are called ask price and bid price respectively. So when you are going to your bank, maybe on one of these days, you will find that there is foreign exchange boards displayed somewhere, and you will find that there is a buy section and a sell section. These two sections shows that how much is the bank willing to sell that money to you. For example, you are going to buy US dollar, and if they were to buy from you, how much are they supposed to buy from you? Because it can never be equal unless the bank is doing zero work. They must have a difference so that the bank makes a profit. Now the difference between the two columns is called the spread. Spread, how far the two prices have been spread. In other words, that you have a bid price and ask price, how far they have spread, that is called spread. In other words, that is the profit of the bank. The profit of the bank is when the buying price and the selling price have that difference. Now when you do exchange, the bank doesn't take your money, and they doesn't take they don't remain with your money, but the difference between the two costs gives them the profit. Now you find that the quote represents the current price of that currency pair, or how much, at what price is the pair being bought right now. Now let's take for example gold. When you quote gold, gold is quoted as XAU USD. XAU, forget about X. AU is a scientific name for gold, that is Uram or Oram, the way you can choose to pronounce that. So the Oram and US dollars can be quoted in terms of 1737.86 and 1737.86. You see, one price should be 17.36 and 17.86. You find that 1 ounce of gold sells at 1737.36, and then it is bought at 38.36. You realize that the difference between these two prices gives us the spread of gold, and the spread is set by the banks, the spread is set by the brokers, the spread is set by individuals, because they are trying also to make money in the market, unless you want them to provide the service for free. Now let's break it down. From there, if you can be able to read the quotes, I will take you to another step in Metatrader 5. Once you have downloaded Metatrader 5 or 4, this is the interface you are likely to see. Don't be perplexed. This is what we do. This is what we need. This is what is going on in the market right now. So let's move on. Another step. Well, now after you have seen the trading tab, that is the quote tab from your Metatrader app that you just downloaded, the next tab is charts. Actually, chart shows the graphical representation of the movement of prices in the market right now. You'll find that there are these two lines. One line represents the ask price and the other line represents the bid price. So a chart will look like this. Actually, this is how a chart looks like. It has the candlesticks. That is what we call candlestick in Forex. So candlestick is a visual representation of how a price is moving right now, and actually it is based on how people are buying or how people are selling right now. So when we have a collection of candlesticks, we form a candlestick chart that has a series of arrangement of candlesticks either going down or going up, and that produces a candlestick pattern that I will discuss later in technical analysis. So this is a candlestick. The candlesticks, the bearish candlestick are usually red, depending on how a trader prefer. Most traders prefer that a bearish candlestick is red, and bearish means that they are going down. This is when the prices opened higher than the point where it closed. And then bullish candlestick is a candlestick that shows that the prices are going up, that they opened at the lower point and closed at the upper price, or the opening price is less than the closing price. So these two are called bearish and bullish candlestick. Now you can choose to change the property of your charts, change the color schemes, and try to make it look like something you want to see, create visual impression and the way you like it. Now once you have seen the chart, and you will realize that either prices are going down or going up, then you can decide. If the prices are going to go up, you need to buy now so that you sell later when the price is higher, so that you make profit. Or if you know the price is going to go down, you need to go short, or you need to sell, so that you sell your properties before the prices are worse, so that when you close your position, or you close your trade, you will be buying. So if I sold at a higher price, down there when I close, I'll be buying at a lower price. If I was buying at a lower price, if I sell up there, if I close up there, I'll be selling at a higher price. So this is what I'm trying to explain, that you need to learn these graphs, and that is why we are here. We are here to teach you on how to interpret the charts, on how to do technical analysis, on how to know when to enter the trade, when to exit the trade, how to manage your time in the market. That is why we are here. So we made this first video to make sure that we have dealt with definitions that you will encounter, so that you don't get lost when we get deeper into this content. So first things first, this is the Forex chart. For instance, this one is a Euro USD chart on a 5-minute time frame. So you can have a chart of 1 day, that every candlestick represents 24 hours. You can have a chart of 4 hours, that one candlestick is the movement of price within 4 hours, or you can have even to 1 minute. So when you click at the center of that chart, you'll get a circle producing a menu that you can change the time frame, you can add indicators, you can use objects, and you can even do some settings, modify the color and all that stuff in that chart. So that chart will help you to develop the knowledge of the market. Actually, you will learn on how the market is moving and make correct prediction. So we have that chart, and in the upper window there is a chart, the lower window is oscillators. We will talk about that one later on, but I want to talk about how to open a trade. Once you're in a Forex chart like this one, how do you open a trade? There is a dollar sign there, meaning that you can change currencies over there. There is a window sign if you want more than one chart on your display, and there is an addition sign upper right corner of that chart. That addition sign is when you want to open a trade. Either you want to sell or you want to buy. Now I know if you downloaded MT5, or you will download, you'll have these options. You can easily dial that addition sign, open a trade, choose buy or choose sell. Now for easier understanding, or for the beginners, simply sell if the prices are going down, if the charts are going down, if the general pattern is that we are going down, you sell. Then if it is going up, you buy. That is the basic knowledge that you need to know as a beginner. Now take your demonstration account and try to practice that, opening a trade and closing a trade. Now once your trade is open, I'm taking you to another step. Once your trade is open, now what? Now what? Consider this. Good. Now this is what I want you to consider. Look at this. This is now the next tab. The next tab is trades. That is trade. Actually, the next tab is trade. This is where the positions that you have opened, this is where the trades that you have opened are displayed. For instance, look at this. This is somebody who just opened a Euro USD and speculated that the prices are going to go up. And now as a result, he opened a trade at 0.01. I'll talk about that. That trade went to his direction and he has made $0.31. Now consider the second trade. The second trade has SL, I'll talk about that, has TP, and you see that he predicted that the prices will go up. Then you see in this trade, he opened the trade with 10.01 and then it has made that profit. I have a couple of things to explain here, but let's first define some terms that we can see here. Now, first we have the balance. Balance is the amount of money that is in your account at that particular time. You see, once you have this amount of money in your account, now you are running business. You cannot run business if you are broke. You cannot run business if you don't have a capital. You don't run business because you just want to run business. So a balance is your money in your account, the money that you can withdraw. Now let's talk about the equity. Equity here represents your bank balance or your account balance plus the bonus. If your broker gives a bonus, I'll share some brokers who gives bonus, and you add profit or you subtract losses. So if you can add the profit to this balance, you get the equity. Equity represents your worth. It is what you are. If you have made a loss of 200, okay, assuming this is the balance of 26,235, that is the balance of the account. But now consider if you had made trades and you have lost 20,000 in that trade. So what you will do is that you will have an equity 20,000 less. So your equity will be around 6,000 or something like that, because you are already on a loss. If we balance the books, if we balance cash books, you are on a loss. That is what we call equity. Equity is your worth. You can have a balance of 20, but your running trades are at 100. So your equity is 120. That is what we call equity. Equity is your balance, add bonuses and add profit or subtract the losses. Now margin. Margin, what is a margin? Actually, margin is the amount of the money you have in your account that you have used to open that trade. For instance, if you look at this margin, it's 10.022.45. That is the amount of money that is running business right now. It's the amount of money that is running the trade. Now, what is the amount of money that is not running the trade? Is you subtract the margin from your balance, and you will find that the margin is 16,532.42, which means that that is the money that you can say that this one is not busy. This can go to saving, this can be withdrawn. That is free margin. Free margin is the part of the equity that is not in business, that is not trading. Now, when you divide the equity divided by the margin or working capital in layman's language, then you multiply by 100, you get margin level. There is something I want you to know about margin level. Margin level should not be too small, should not be less than 100. Actually, I advise my students that you should not open positions until your margin level is below 500, because once you are below 500 or at worst below 200, you're risking blowing your account. And when you blow your account, it means that you have more losses than the balance you have in the account. Now the broker is at liberty to close your account because you are running at a loss. Why should you stay in business if you are at a loss? So make sure that your margin level is not below 200. Most importantly, I insist on 200. Maintain your margin above 200 so that you don't have pressure of margin call being stopped out and all such stuff. I encourage you to open trades that are not jeopardizing your balance or your account. Now, there are something I want you to consider here. The first trade is opened at 0.01, which means that this is a smallest fraction, and it makes a small amount of money like 0.31. But again, as it is small, it also risks a smaller part of your account. Now consider the second one, it's 10 points. You can imagine it is almost 1,000 times the first trade, which means that you really risking a lot of money here, because of course you are risking a lot of money, but it attracts profits faster. Now consider this. Consider the profit that has been made from the second trade and the first trade. So the larger this 0.01 and 10.01 is called the lot size. You determine that number when you are opening your trade. Lot size. What is a lot size? Lot size is the amount of capital you're going with in the market. A lot size is the size of the business you want to run. You cannot start selling cars if your account balance is $1,000. You cannot maybe start building a big house if your account is $10,000. You will not finish that because it does not match. So if you really need to make profits fast, you use a bigger lot size, but it should not be too big until it compromises your account balance. For instance, this guy believed that if he can open a trade of US dollars and Canadian dollars at 10, his account will still have, he will have spent a margin of 10,022. Still, when you calculate the margin level, you'll find that you are still above 200, which means that you have risked almost half of your account, but it's not really half. So that is when you consider what you want to risk, what you want to put in action compared to what you are left with. In this case, determining the lot size depends on the size of your account, the type of trader you are, and why you are in forex trading. Some people are in forex trading because they are gambling. They want quick money. They want to get rich quickly, and they are out of business. That is not why we do forex. We do forex to be in the market for a longer time so that you can get more opportunity. You can get more opportunity the longer you stay in the market. So look here, you can sometimes back when I joined forex back in 2017, I never knew what I was doing. So I could just load my account, jump into business and risk everything, and in 2 days my account is gone. And I believe a couple of accounts and I had good losses actually, but later on I realized, wow, forex trading is not gambling. I sat down, I started training, and to my surprise, I had no mentor, I had no instructor, but I made it. And I realized that trade can be something different. Now I do it differently as a professional, not as just a mere gambler. So if you want to make profit in forex trading, you make sure that you don't put all your eggs in the same basket, because what if you place your trade at 10.01 and then the market goes against your expectation? It will blow your account just like that. You don't want to risk that. You don't want to go there. That is called the lot size. Another thing that we want us to look at is SL and TP. Another definition, very important. SL is basically the stop loss. Stop loss is how far do you want to go? How far are you risking? How much money will you lose if the price collapses? If the price goes against you? For example, you are doing this, a retail and you are selling food prices, and all of a sudden there is a tax, there is taxation. The tax has been imposed and the price has gone too high. What do? You sell at a very higher price, making unimaginable profit. Now what if we go opposite and we say that now you bought, for example, is any retail product, and then the government has reduced tax so that the price must go down. You realize that you will have to sell your product at a very low price, making losses that nobody will come to compensate you, not even the government, because it is just what you didn't expect. That one is called stop loss. If it goes against you, where do you want it to stop? Because market will move. Whether you lose money or you don't lose money, the prices will keep moving. Now, if the price move against you, where do you want it to stop? Where do you want to exit? If it is against you, that is where we need stop loss. If you want to be a good trader, don't open a trade without setting a stop loss. I know maybe most of you have believed that I will be watching my charts, I will just be there and there is no need of stop loss. Don't be deceived. Stop loss are very important. Stop loss helps you that So, sometimes you find a market that is quiet, but all of a sudden, within 1 minute, the market has gone up high. Like it just shoot, the price shoot up high, and you were expecting it to go down. So if there is no stop loss, your account will be cleared no matter how much you have in your account. I have lost a lot of money, I can tell you, but not anymore. Not right now. Right now, I'm smart and I don't want to lose money. Now, there is TP. TP is actually take profit. Take profit. We said take profit if we don't want to watch the chart. We said take profit if we just want the price to hit there and we get our profit and we get out of the market. So you need to set take profit so that you can know exactly what your aim is in the market. So look here, if this is our take profit, it means that once the price hits there, the trade will automatically close and we will have our profit right there and right then. Now that is about take profit and stop loss. I'm trying to explain these terms basically for any beginner who is just green, who is just entering business and you don't even know what any of these things mean. Now let me talk about closing a trade very fast. In that open position, for example, you have Australian dollars, USD and Canadian dollar. You scroll from right to left, just a trade. That trade, scroll from the right to left, and then you'll get a menu. That menu will give you an option of closing, an option of editing, take profit and stop losses, or an option of going to the chart. Make sure that you try that when you have your demonstration account. After looking at the Metatrader platform and a few features, you will learn more of these features with time as we actually continue with our classes, with our lessons, with our presentations, and as you continue with this practicing part, the demonstration account, you will learn more features of Metatrader 5 that you want to need, and you will need also to know how to log into accounts. That one is easier. You just scroll from left to right for more menu that you can work with. So that is it. Now I want to talk quickly about currency pairs. Currency pairs is two pairs combined. Actually, one currency quoted against another, they make a pair. For instance, we have major currency pairs and then we have minor currency pairs. So sometimes are crosses, sometimes they are called, some are exotic. So we have currency pairs that we trade with. So you have, for example, the following major pairs. Major pairs are pairs that are paired with US dollar. Actually, US dollar rules the market. That is one hell of a pair. That is one hell of a currency. You see, US dollar is almost the dictator of the market because of its strength. US dollar happens to be strong because most countries prefer referencing to US dollars. If you want to import oil to your country, you pay using US dollar. If you want to import cars from Japan, you first have to convert it into US dollar and then do that and all that. If you want to travel to even Europe or you want to go to Korea, you need to exchange your money first into dollars. It's like a reference point. Now from there we can measure all other things. It's like saying that everything starts from there. Now another thing why US dollar is strong in the Forex market is because of political stability of US, and also you find that they are economically stable. Talk about political influence, talk about their Federal Reserves, talk about how much gold they got, talk about how they are, even their ideologies. We just know that United States is just United States, and in as much as other countries have come together to try and overthrow the fact that that dominance, like the other day, the western part the eastern part was trying to fight against that, but I'm not going into that. Let me talk about major currency pairs for today. So major currency pairs have US dollar. US dollar is a pair. Any pair containing US dollar is called a major. And major currency pairs are traded mostly in the Forex market. For instance, we have Euro USD, you have USD and Japanese yen, US dollar, Japanese yen, that is USD JPY. We have GBP and US dollar, that is British pound and US dollar. You have Australian dollar and US dollar. You have US dollar, Canadian dollar. You have US dollar, Chinese renminbi. You have US dollar and Swiss franc. These are measures, the forex measures. Their markets are very wide, the economy are very stable compared to other countries. So these are the measures, they rule the market. That does not mean that other currency pairs does not make profit, but these are just forex measures. Well, on the other hand, we can have other currency pairs. We call them minor pairs. Others are exotic and others are just crosses. You see, minor pairs are pairs that doesn't necessarily have US dollar in them. They don't have the US dollar in them, and they form just a small fraction of the market. These currency pairs are just there. Their trend is usually different from that of US dollar. They are not affected by how the dollar moves. Now these currency pairs can be, for example, you have euro and Great British pound, and you have euro, Japanese yen, Great British pound, and Japanese yen, and any other currency pair that does not contain a US dollar in it is classified under minor. So that is the currency pairs you will see in your quotes. In the quote part of your Metatrader 5, you will see all these currency pairs. You can add or remove any that you don't like. And apart from the currency pairs, there are other things that you can trade in forex. There is commodities. There is things like metals, like copper. Talk about gold. Talk about silver. There is indices. There is recently there is this volatility issue, the volatility market that is just growing very fast. So there is a lot that you can trade in forex, but I just wanted to mention currency pairs so that you don't get confused about them. You may need to know them, because maybe you are in our WhatsApp chat, or you are in our Telegram channel, and we are trying to give out the signals that we have analyzed. You wanna need to know the currency pairs we are talking about. Now that is basics. That is some of the definitions that I had to share, because they form the basis of our other discussions. Make sure that you don't forget them, or at least along the way you understand them, and you can simply know what it means without referencing or without getting lost. Now first things first, I will have to request you to practice what we are learning in this channel. Kindly try to find a way of connecting with us. Find a way of doing what you learn every day, because practice makes perfect. Now first things first, today I want you to download Metatrader 5 and get your things set. Number 2, you try to open a real account. I will share the links for opening real account below this video. I will also share my Telegram channel over there, and I will not forget to share what you need to know in our next video. So make sure that you click the subscription tab and then turn on notifications, because these videos will be released in series that you don't want to miss any. I will just move from one step to another, one after the other, so that we all get on one page. In a couple of time we will all be experts, and you might not need me, or you might not need any other person. I know there is information all over in YouTube, in online, Facebook, and all that stuff, and sometimes it's even becoming noise to you. So you really need to stick to one type of mentor, or one series of one training, so that once you're done with that one, you combine, you make sure that you have a flowing information in your mind. And I want to welcome you to our trading community. We have 2 groups that we analyze and trade together as a family, actually, so that you don't struggle on your own to understand the market. So I will share my Telegram channel. I will share and the brokers I might recommend for you to open a real account. Then from there, let me know what you think. Let me know what you want us to talk about. Let me know how far you have traded. Let's share the trading experience in the comment section below. So kindly don't forget to subscribe. Let's make ourselves known. Let's make ourselves growing. Let's have one another's back. Love you so much, guys. See you in the next video.